All right, guys, just turning on the camera here for a midweek update. I'm getting a lot of feedback from people in Stats Edge Pro, which we have a chat room and we talk about all the time. They send me emails and all of this, and just my general following. So I'd talk a little bit about what happened yesterday in the market, just free form here. If you like these kind of videos, make sure you share and all that kind of stuff. So I know that. And make sure you go to statsedgetrading.com and check out Stats Edge Pro, where even in this market, we're getting some wicked trades from the algorithms that I've created. So, first of all, I just wanted to go over this that happened yesterday. We had a bad day in the market that was kind of led by Nvidia. The Qs were down, I think, 3 or 4%, and then we have the SPY down significantly as well. But we'll just focus on the SPY, and the reason for that is that I've been talking on this channel and on Twitter and Stats Edge Pro for a while now that we are entering a choppy season, and I expect things to be choppy, and I'm going to play them as such. So I'm going to talk about why I think that's true. I'm going to talk about the plays that I've been making and how I'm going to be doing it. We're going to go over all of that. So, first of all, why do I think that there's a choppy season coming? Well, we had a push significantly up from this low that got everything a little bit overextended. I have stochastics here, but just pick any overbought, oversold indicator that you like, just showing a little bit overbought. Now, for that, generally not something that I care about. In fact, if you run the math, if you buy overbought conditions, you do better than if you buy oversold conditions. So why in this situation was this a little bit more interesting to me? Well, first of all, yes, we are up at all-time highs again. We are at resistance, and we came a long way from there. But I am going to borrow this quote right here. Shout out to JC from All Star Charts, buddy of mine. The whole All Star Charts crew is phenomenal. This is some research that they did that I'm going to rely on that basically just shows uh, what happens on average this time during an election cycle. So I am not one for seasonality. I'm not one for buy in May or sell in May and go away, all this kind of stuff. There's you can track it, you can look at it. There is some edge or advantage there, but not enough that I really care about. Now, however, these election cycles seem a little bit more interesting to me. So we have this election cycle going on in which we have every 4 years. Again, I'm Canadian, so I don't really know or care too much about what's going on, but we have these every 4 years. There's a new election in America, and we can track these out because they've been obviously going on since the beginning of America. So what we have is a pretty consistent cycle. So what we're looking at in this chart is what happens on average for election years. So for the year that we're currently in, if you took all of the S&P returns over the last 50 years, 5 years and 10 years, which they have their different charts here as well, you can see what generally happens. And so for example, the dark black line, this is the last 5 or 10 years. So if you take the average return and you started at January of every election year, for the last 10 cycles, you get this black chart right here. And same with the blue and same with the gray, just for different time periods. Now, the idea is that around this time, around September, October, September, which are historically weaker months anyway, you have this drawdown that happens going into the election. Now, we can pontificate about why that may be. To me, it just kind of makes sense if your government is uncertain for a period of time, big players aren't really interested in making large bets. Just makes sense, right? We can look at, if you want to, in a future video, doesn't matter who wins, which side wins, but for this period of time, you have this uncertainty. And then in November, when you have a little bit more certainty of what's going on, generally until the end of the year, you can have this upward drift. But for now, we're going to have choppiness. So if you take that choppiness and then you compound it with what we're seeing here in the market, where we hit this prior resistance, we got overbought, and then we pulled off, that makes sense. Now, it's not like I'm just going to short the market right here because we are in this historically weak time. I'm just going to hit the short button and stay short until November and then flip and buy it. There's no plan behind that. There's no risk management. There's no way to do that. But knowing in the back of my head that this is kind of what's going on, it allows me very easily to make plans. So one thing we do, especially over at Stats Edge Pro, is we run different algorithms, right? So these are all different algorithms in which I run. The red, the green, the orange line are different algorithms. The shaded area is what happens if you combine those algorithms and you end up trading them all. And the blue line is the S&P 500. You can see just dramatically beating the S&P 500 by taking pullback, trend following, and revision to the mean algos and trading all of those together. You again beat quite handily the S&P 500, and that's our goal. So what I'm doing is saying, okay, if we are into historically choppy time, and I'm seeing what I'm seeing in the market, it means that potentially that trend following algorithm that's looking to buy things that are just breaking out and moving higher, I'm not going to ignore, but I'm just going to allocate less time and less capital to following those. A lot of the things that we see triggering are things like EVRG, right? So this yellow line or this green line right here was where the trigger price happened on Tuesday. I did buy some of this, but this is a power distribution company. So it's essentially moving money into safer instruments. This is a utility. It's not going to, be super fun or amazing. It's a utility company, right? So knowing that the algorithm is kind of um, pushing towards that, asset management companies, things like that, I'm going to focus a little bit more on this pullback algorithm. So SMTC is a trade I took today. This thing came down. It touched the entry price exactly. I chased it up a little bit as it kind of reversed, but showing that there are going to be strategies that work for every environment. And what we're trying to do is first identify the environment, and then second, identify the strategies that's going to work best in that environment. So that's the main purpose I wanted to get here. So if I'm correct, which there's a big chance I'm not correct all the time. I am no guru. But if this seasonality is going to hold true, where we could potentially get a bit of a pullback or even just some chop around all-time highs, maybe we break out to new all-time highs and that suckers in a whole bunch of longs, and then they push it back down below all-time highs and that suckers in a bunch of short. I could see this game occurring as well, as opposed to, a sell-off, a pretty dramatic sell-off. I could see us kind of getting up to this all-time highs and just doing the most damage to people, which would be breaking all-time highs and then selling off, and then breaking all-time highs and selling off. I could see that occurring as well. So if I'm right and a choppy environment is going to be what's going to happen, what I'm going to do is I'm going to spend a much more of my time looking for strong stocks that have been pushing up and trying to get them as they're pulling back. I'm going to look for more revision to the mean plays where stocks that maybe have gotten beaten up are starting to bounce, things like that. Less of buying something as it's breaking out and then trying to hold it for weeks and months, because that environment is going to be tougher for that strategy. So I don't think it's the end of the world. And I don't even think we're really going back down here, I wouldn't imagine. But based off everything I'm seeing, again, we could be in for some chop. And that's how I'm going to play that chop, is with revision to the mean and pullback strategies. If I'm wrong and we break all-time highs and we just continue, that's absolutely fine, right? I'm buying some of these breakout strategies as well, so I'll have some exposure there, but it's where do I spend the most of my capital and where do I spend most of my time? Right now, it's pullbacks and revision to the mean. So just stream of consciousness video to put out on a Wednesday. If you're interested in more of this content, again, come on over to statsedgetrading.com. Check out StatsEdge Pro. If you want the output of the algorithms that I've been talking about, you can check them out there as well. And I'll talk to you guys soon.